What is going on, XRP Army? Welcome back to the channel. Today we are initiating a red alert protocol because the market is witnessing one of the most sophisticated bear traps in the history of digital assets. If you are looking at the chart and panicking because XRP is trading at much like FBR, you are falling victim to the greatest trick Wall Street has ever pulled. The title of this video is, Ripple's US shift could surprise investors. And let me tell you, the surprise is already here. While retail investors are capitulating because they are bored, the titans of Wall Street and Citadel Securities and Fortress Investment Group have quietly engaged with Ripple in a way that suggests they are preparing to corner the global liquidity market. In this comprehensive deep dive, we are going to expose the 500 million war chest that nobody is talking about, why the Hidden Road acquisition is the Trojan horse for institutional adoption, and why this current dip is the last chance to get in before the US shift reprices everything. Let's go extremely deep into the Citadel Securities surprise. In late 2025, Ripple raised $500 million in a strategic round. Who were the investors? Citadel Securities, Fortress, and Pantera. This is the surprise. Ripple didn't need the money. They have billions in cash on their balance sheet. They took the money to get the top partners. Citadel handles approximately 40% of all US retail stock trading volume. They are the plumbing of the stock market. By aligning with Citadel, Ripple has effectively hardwired XRP into the plumbing of the US equity market. This shift from fighting the SEC to partnering with market makers is the bullish signal of the decade. It means the liquidity for the next run won't come from retail traders on Binance. It will come from algorithmic trading desks on Wall Street that need instant settlement. When Citadel turns on the XRP liquidity spigot for their institutional clients, the volume we see today will look like a rounding error. This is asymmetric warfare against retail sellers. We need to aggressively analyze the heart price action, 151 retrace, versus the ETF inflow reality. I know it hurts to see red. We are down about 19% from the January highs, but look at the data that matters. The US spot XRP ETFs, Bitwise, Canary, Franklin have accumulated 137 billion tiers in assets. Even as the price drops, the ETF shares outstanding are increasing. This is a massive bullish divergence. It means the price is being manipulated downwards via the futures market to allow institutions like Citadel to fill their spot order books without slippage. They are buying the asset, ETF spot, while shorting the perp futures to keep the price capped. This is accumulation 101. They want you to get bored. They want you to sell your coins at $1.50 so they don't have to buy them at $5. If you understand this game, you don't panic, you accumulate. Furthermore, let's look at the Hidden Road acquisition. Ripple bought Hidden Road for $125 billion. This is the largest acquisition in crypto history, yet nobody is talking about the implications. Hidden Road is a prime broker. They allow hedge funds to trade crypto without taking custody risk. By owning Hidden Road, Ripple now owns the infrastructure that allows hedge funds to trade XRP. This US shift is about moving from payments, which are slow to adopt, to trading collateral, which is instant. If Hidden Road starts using RLUSD and XRP for collateral management, which sources say is already in beta testing, we are talking about billions in daily volume appearing overnight. This is the definition of a supply shock catalyst. Finally, we have to address the tier IPO valuation leak. Leaked reports from private equity markets suggest that Ripple is currently valued at 50 billions in the secondary markets, making it the 9th largest IPO candidate in the world. Yet the XRP market cap is lagging significantly. This gap between the equity value, Ripple the company, and the token value, XRP, is unsustainable. The surprise for investors will be when the IPO S1 filing drops later this year, and the market realizes that Ripple's balance sheet is basically just XRP. The repricing will be violent and instant. Now let's pivot to the boring but bullish side of the equation, the Budgie Treasury integration. While everyone is focused on the price chart, Ripple quietly closed a $1 billion deal to acquire G Treasury. This platform is used by thousands of corporate CFOs to manage over 120 trillion in flow annually. The US shift is that Ripple has now integrated RLUSD, Ripple's stablecoin directly into this dashboard. This means a corporate treasurer at a US company like Ford, Delta Airlines, or Apple can now click a button and move millions of dollars using the XRP ledger without ever knowing they are using crypto. This is the surprise. Utility isn't coming from you buying coffee. It's coming from Fortune 500 companies managing their daily cash flow and working capital. Let's discuss the RLUSD stablecoin explosion. RLUSD has crossed 138 billion in market cap in record time. It is growing faster than USDC did in its early days. Why? Because of the Trail acquisition. Ripple bought a company called Rail for $200 million to specialize in stablecoin payments. This US-focused stack, G-Treasury plus Rail plus Hidden Road, creates a closed-loop system where value never leaves the Ripple ecosystem. And the bridge currency for all of this? XRP. Every time a treasurer swaps RLUSD for euros or yen, XRP is burned as gas and used as the bridge asset in the automated market maker, AMM. The burn rate is about to go parabolic as this integration goes live in Q2 2026. This creates a deflationary pressure that acts like a stock buyback, constantly increasing the value of the remaining tokens. We also need to talk about the par January effect reversal. Historically, when XRP has a red January, like we just did, it often sets up for a massive Q2. The smart money sells in January to harvest tax losses and rebuys in February. We are seeing volume on US exchanges like Coinbase and Kraken ticking up significantly this week. This suggests the rebuy phase has started. The surprise will be how fast we reclaim $2 once the selling pressure evaporates. When the institutional algorithms switch from distribute to accumulate, the order books thin out rapidly, leading to God candles that catch retail traders off guard. Furthermore, let's look at the WisClarity Act catalyst. The US Senate is moving forward with the Clarity for Digital Assets Act, with Ripple executives now advising the White House. As seen in the recent summit, it is highly likely that this bill will favor the utility token model that XRP pioneered. If this passes, it opens the door for US banks to hold XRP directly on their balance sheets. The G-Treasury integration is simply the plumbing being laid before the water is turned on. Once the legal floodgates open, the infrastructure is already in place to handle the volume. This is strategic foresight at the highest level. Let's address the competition narrative. Is the US shift too late? Critics say stablecoins have already won, but look at the Hidden Road data. Institutional demand for credit in crypto is at an all-time high. Stablecoins don't offer credit. Prime brokers do. By owning the prime broker, Ripple offers something Circle, USDC, and Tether, USDT cannot. Leverage. Institutions love leverage. If they can use XRP as collateral to get leverage on their trades, they will hold XRP. This is a higher level game than just payments. It turns XRP into a financial instrument, not just a currency. This distinction is critical for understanding the future valuation. Finally, we have to touch on the Han supply shock math. With the ETFs locking up coins, and Hidden Road locking up collateral, and G-Treasury locking up corporate liquidity, the free float of XRP is disappearing. We are seeing exchange reserves drop even as price drops. This is a bullish divergence. It means the coins being sold are being moved to cold storage, not to other traders. The supply shock is real, and it is here. In this final segment, we are bringing it all together to answer the question, what is the price target? The updated models from Standard Chartered and 21 shares are converging on a $7 warrant to $8,000 warrant target by the end of 2026. This isn't moon math. It is a calculated projection based on the volume multipliers we just discussed. But the road to 8.0 is not a straight line. It is a psychological battlefield designed to shake you out. The surprise is that Ripple is no longer a crypto company. It is a fintech conglomerate. They own the bank, custody, the broker, Hidden Road, the software, G-Treasury, and the currency, XRP RLUSD. The market is valuing them like a dying crypto coin, 1.51, while the private market values them like the next Visa or MasterCard, 50 billion. This arbitrage gap will close, and when it closes, XRP prices will skyrocket. What is your hard exit strategy? You need to be cold and calculated. My strategy is the third's rule. 1 and a sell 1.3 at all-time highs, 3.84. This recovers your initial capital and locks in a massive profit. You are now playing with house money. 2. Sell 1-3 at the cycle target. 7-0, 8-0. This creates life-changing wealth. This is the money for the house, the debt freedom, the generational change. 3. Hold 1-3 for the legacy play in 2030 plus. This is the moon bag. If XRP becomes the global reserve currency bridge, this portion could go to numbers we can't even predict, 50 plus. But you must be willing to hold this for a decade. Do not sell 100% at $3. Do not hold 100% back down to $1.0. Be disciplined. The US shift ensures that the long-term floor for XRP is much higher than previous cycles. We also need to issue a massive debt security warning. As we approach these high targets, you will become a target. We are seeing a rise in SIM swap attacks where hackers steal your phone number to access your accounts. We are seeing sophisticated phishing emails that look exactly like they come from Coinbase or Ledger. Action item. Get a YubiKey, hardware security key for your email and exchange accounts. Move your XRP to a cold wallet, Ledger Tracer, and put the seed phrase on metal plates. Do not store it on your phone. If you have life-changing wealth in crypto, treat your security like a bank vault. Let's talk about the next 30 days. Watch the MRLUSD market cap. If it crosses $2 billion, it confirms the G Treasury integration is scaling. Watch the UETF inflows. If they remain positive despite price drops, it confirms the Citadel Fortress backing is holding the line. These are your signals. Price is a liar. Volume is the truth. The market makers are counting on you to be impatient. They are counting on you to sell at the bottom. Do not give them the satisfaction. The bottom line is this. The US shift is real. The acquisitions are done. The infrastructure is live. The price is currently on sale. The surprise is coming for those who aren't paying attention. The transfer of wealth is happening right now, from the impatient to the convicted. Make sure you are not one of them.